Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. And boy, oh boy, you know, we're going to have a week lined up after Friday's drop and the 1,200-point rally in oil. You know, we're going to get volatility this week for sure. But first things first, let's take a look at something so that you are aware of this. It is Monday, June 9th, 2008, and forced margin liquidation is very likely for at least the first half of the trading session on Monday. That means there's going to be brokers from every walk of life calling their clients and saying, hey, you're in a margin call. Do you need to send more money? Do you want to send more money? Or do you want me to get you out of the trades? And a lot of traders say, I can't come up with that money. Get me out of the trade. Oh no, sell out my commodities, keep my stocks, keep my commodities, get rid of my stocks. You're going to get all kinds of answers like that when you're a broker, and that basically turns out to be forced margin liquidation, which starts off early on Monday morning, usually after a Friday rout. Maybe it could straighten out mid-afternoon, you don't know, but there's a lot of technical reasons why now, after the rout on Friday, that the markets look like they want to go down again. We have a green omni for the S&P and a green omni for the NASDAQ. Did I say green? Oh, don't even consider buying it tomorrow. Not yet, anyway. We got a red omni for tomorrow, and we'll see what happens. We're going to start the day off tomorrow with going short, and we have some good technical reasons why. And with that in mind, I want to take you to the charts now and show you some of those reasons. Okay, traders, the first chart I want to show you is the Dow Jones Transportation Average. That we usually use as our leader. It usually will give us a clue as to where the other indice markets will go. If the Dow Jones Transports Average goes lower, likelihood is that the rest of the indice markets follow it. With that in mind, big outside day on Friday, big reversal day. Now heading down towards the 49-bar average. You have your highs in place. No challenge of those highs last week, even though it started off that way. But the high rolling price of crude on Friday gave it a haircut. But it is what it is, and with day traders, we're not going to assume it's going to continue going back up. For now, it's going down, and we're going to trade it on the downside. So we are expecting some downside. Now I want to show you the indicators that we're following based upon the Dow Jones Transportation Average and see what you think of those. Okay, traders, you are looking at the indicators that we're following, several of many that we actually follow, but the most widely recognized indicators are on the chart before your eyes. The first one here is the Commodity Channel Index, the CCI, Commodity Channel Index, and we expect the Commodity Channel Index to continue lower because, as you can see, this blue average has now crossed through the red average. That generally produces a sell signal. Just below that, you have Relative Strength Index, and that is clearly pointing towards the downside. So RSI pointing towards the downside. Next, we have the WADX, or Average Directional Movement Indicator. The positive green, which is going up when the market's going up, is now going down, and it crossed through the red, which usually gives a sell signal. So sell signal, sell signal, sell signal. Then you have slow stochastics, which have a little double-legged look to the top right here. One leg up, second leg up, and down it's going. Or a M formation, however you want to look at that. And we are starting to head lower there. Another sell signal. And then you have the DMI, or Directional Movement Indicator. And that green positive indicator pointing down, the red pointing up. Generally, when they cross, it is a very powerful move. If the green's going down and red's going up, it's a bearish move, and that's what we're looking at now. So the indicators on the Dow Jones Transportation Average are all bearish, and I think we're going to go with the downside. Let's go look at a few more charts now, and I'll show you reasons why the indices should likely follow in suit. All right, traders, the next chart before your eyes is the June S&P Daily Bar, and we have now gotten below the Omni's Trading Academy's proprietary moving average. We are below it. We're also below the 49-bar moving average, and we have failed about 10 trading sessions ago at the 200-bar average. Now when you look at this, you very possibly have a shoulder, a head, and another shoulder, which would create a head and shoulders bearish formation. And you are below the proprietary moving average. That's the S&P. That's telling me to go short on top of the indicators that are wrapped around the transportation average. So with that in mind, I'm taking a short tomorrow in the S&P. I want to show you two more charts now to help illustrate to you why it looks like downside will likely come our way. Okay, traders, what you're looking at now is the NASDAQ daily bar, the June daily bar. And what we have here is the 200 bar moving average, the all-important 200 bar moving average. And as you can see right here, we are now below it. Got below it Friday, and it's trading below it on Sunday evening. This has been the whole area of indecision in the NASDAQ for a couple of weeks on end. I have mentioned many times over that we are at a spot where the markets have to make a decision. They're uncertain whether they want to turn around and become bullish or continue with the downside and stay as bears, as we've seen in the past few months on the way down. Then you had this bit of a rally, and it became questionable. Well, after Friday's move, if we get another couple of days that look like this, then obviously it's shown its true colors. But believe it or not, we are still at that area where of indecision, pretty much. It's the area of indecision. And if it turns around and rallies, we are day traders, we'll trade it any way it goes. If it turns around and rallies, we're still stuck in this indecisive area. Again, if it continues to drop like we're hoping for, well, then at least we have general direction and we can start trading in that direction. For now, though, I will say we are still at that spot of indecision. I'll say it over and over because it's true. You look at all your charts, you'll see that that's the case. Let's go look at another chart now. Okay, traders, the next chart you're looking at is the Emini Russell, the ER2M8, if you will. It is the June daily bar. This is the 200 bar moving average, and we were only able to get up above it on Thursday and a little bit of time on Friday, and right back down we went, traders. This one has failed at the 200 bar average, and the likelihood is there is more downside coming. 723.80 is the 49 bar average. That may be its first plateau. Let's see what we're going to get out of it. But now you've looked at the Dow Jones Transportation Average, you looked at the S&P, you looked at the NASDAQ and the E-mini Russell, and all of them are pointing towards at least the beginning of Monday, starting off on the downside. Do your homework, traders. See if you get that same signal. I'd love to see a test of the proprietary moving average down here at 709.30. Let's see what we're going to get out of it. So, you've seen the charts, traders. You see what we have here? I will say this, it's going to be a tricky day Monday because we're absolutely tied to the crude right now, but in opposite directions. Crude goes up any further, you know they're going to spank this thing. But if for some crazy reason they happen to nail the crude 500, 600, 700 points, that could give us some buoyancy. So that tells you tomorrow will be a confusing day, but I will say it's pointing towards the downside, and that's the way we're going to trade it. So tomorrow, June 9th, 2008, on Monday, the S&P E-mini has a red Omni. Omni says to sell the mid to high 1360 level. Somewhere in the high 1360s, I'm looking to take a short position. Place your stop in a sensible area, traders. Always place your stops and place them first. As you've seen on Friday, a stop is your best friend. Those traders out there that traded without stops on Friday got carried out in a stretcher, so to speak. You know what I'm talking about. You make sure you place your stops. At least you know you get knocked out where you expected to get knocked out. Good trade, bad trade, or indifferent, you're out of the market and you're not wishing that you were out of the market. So, place your stops first. Mid to high 1360s is where we're selling. Omni's profit objective is the mid to low 1340s or be out by the close. There is some support, however, at 1351 if they start to hit this thing. So we're looking to short this thing in the high 60s and expect a nice drop into the mid to low 1340s. Some support at around 1351 if they start really pushing down there. Same thing with the NASDAQ. We have a green. A green, I said it twice. I wonder what that's about. I wonder if it's an omen. I'm getting scared now. We have a red Omni for the NASDAQ as well. And we expect that to go lower. We're looking to sell the NASDAQ somewhere as it crosses the 20, the 2,000 mark. We're going to look to get short somewhere up there. Traders, both of those trades are getting close. We're in the mid-1360s now, and we're in the mid-1990s in the NASDAQ. Take a look at your charts and do your homework. All right, traders, it's going to be a busy day tomorrow. Don't trade alone. Never try to do this alone. Come on down to our site. It's www.livewithoscar.com and huddle with us Omniacs, and we will help you try to figure out how to get this right. We do an extensive amount of teaching. We do analysis. We hold classes. I'm on camera and microphone live throughout the day. So come on down to the site and let us help you get this right. Traders, come to the forums. When you're at my site, there are forums. Not only are there chat rooms for you to go into where we're live speaking to one another, but there are forums with thousands and thousands of questions and answers going back and forth from traders all over the planet. And you can get a lot of good information out of those forums. So go to the forums when you get to our site and post some answers, post some questions. And believe it or not, you get free OmniBucks every time you post in the forum, and you can trade those OmniBucks in for free classes at the site. We are here to help you traders, so take advantage of what we have for you. All right, traders, if you'd like to give me a call anytime during the night, 702-629-4755. As always, please shoot me those emails. I've answered every email that's come in since this site started, so don't you worry, I'll be answering yours. Shoot me an email to oscar@futuresanalysts.com. Guys, is there anything else I should talk about on this Sunday evening before we get rocking and rolling in the markets? We're all good?
Yeah, I think you got it.
You, anything?
Yeah.
Yeah, what do you got to say? All right, we got a new member of the audience today. All right, traders, remember to say this to yourselves every morning, every afternoon, every evening, because it'll help you with the mentality behind staying calm in these markets. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.